This is King World News. I'm Eric King, and you're about to hear an information-packed interview with one of the great minds in the natural resource sector, Rick Rule. Rick gives us a look at what he is doing with his own money, talks about consolidation in the gold sector, as well as what he sees for 2010 and in the future. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we have an incredibly entertaining interview with Lorianne LaRocco from CNBC. She talks about her fascinating book, Thriving in the New Economy, which is filled with billionaires and Wall Street legends, and there are comments on the collapse and how to prosper, where they see us headed in the future, and so on. We also have a powerful interview with my good friend Bill Lagner from Baring Asset Management, who was recently interviewed in Barron's Magazine. Also, remember to go to the Gold Plus page for the exclusive weekly Metals Wrap with Ted Butler. Joining us now from New Zealand is Rick Rule from Global Resource Investments. Rick, today we want to talk about a couple of things. What you're doing with your own personal money and also your major investment themes for this decade. Let's start off with talking about what you're doing with your own money.
Well, to begin with, I'm building cash, not as part of a conscientious strategy, but rather because the recovery, particularly the recovery in natural resource stocks this year, has been so strong that many stocks have hit my target prices for them, and I'm selling them, while at the same time it's becoming more and more difficult for me to invest because the bargains that we look for are less and less prevalent. Having said that, when I talk about building cash, as we've discussed before, an important part of my own cash holdings are gold and silver bullion and the gold and silver ETFs. So I have been personally increasing my exposure to both gold and silver as a consequence of my including the bullion in the cash component of my own portfolio. I mean, in terms of broader themes in parts of investing that I'm involved in other than cash, I think the entire energy sector will do extremely well in the next 10 years. I am particularly attracted, as we've discussed before, to alternative energy, and in that subset, I am particularly attracted to the geothermal part of alternative energy, and more specifically to U.S. geothermal stocks as a consequence of the current administration's largesse. I'm attracted to conventional energy for reasons I think we'll discuss later in the interview. I see 5 or 6 years out a fairly dramatic spike in crude oil prices. I have been making investments in agriculture and agricultural minerals on a global basis, and I am continuing to make selective investments in water-related investment themes, albeit with a view that it may take the entire decade to get paid on those investments.
Let's talk about alternative energy a little bit more for just a minute, because you bring that up. What do you see in the alternative energy sector? You mentioned geothermal, but what else are you looking at there?
Well, I think the entire energy space will do well. We have 6 going on 7 billion people in the world, all of whom aspire to the standard of living that you and I enjoy. Increasingly, because of political liberalization in emerging markets, those people are getting rich enough that they can begin to compete with people like yourself and myself for the components of the first world lifestyle. And a big component of that is energy. So as a consequence of rising global demand for energy, I think all forms of energy will do well. What sets alternative energy apart is the social and political acceptance that it enjoys. You can develop alternative energy plants politically and socially where it's very, very, very difficult to develop conventional energy plants. For the first time in my life as an extractive industry investor, I'm involved in resource development in the United States where various constituencies that have hitherto been hostile to me, politicians, the popular press, people like that, are wholly supportive. And as a consequence of that, the cost of capital associated with green energy developments is low, and the political opposition to them is low. Now, not all alternative energy investments or sectors are equal. Although there is political and social support for all of the sectors, there are economic challenges without subsidies for most of the sector. Solar, as an example, has a critical problem with deliverability, that problem being night. The sun doesn't shine particularly well at night, hence solar energy doesn't work particularly well. Wind is problematic because wind doesn't always blow, and where wind blows, people don't want to live. So places like North Dakota or the Texas Plains that have wonderful wind resources don't have many wind consumers. So from my point of view, the most attractive sectors in the renewable space on a global basis are small hydro projects that are hydro projects less than 100 megawatts that don't require big dams that destroy lots of farmland, and geothermal, and particularly in geothermal. And I would say that my number one investment theme for the next 3 years would be U.S.-based geothermal developers. U.S.-based for two reasons. In the western states, the states themselves are mandating that their utilities buy increasing amounts of so-called green or non-carbon generating electricity. And they are mandating power purchase prices that are extraordinarily attractive from a historical point of view. And hence, geothermal energy projects can be put online with high predictability of revenues and unleveraged internal rates of return in the sort of low 20% range. At the same time that the state governments are guaranteeing these very high feed-in tariffs, the federal government, through a variety of subsidies at the Department of Energy, is lowering the cost of capital for U.S. geothermal producers substantially. So as I look at the world, the most attractive utility-scale energy investments in the world are geothermal investments in the western U.S., and I am extremely attracted to that sector.
Since we're on energy right now, let's talk about oil. What are your thoughts on oil? We're floating around the $80 area currently. What do you see going forward there?
I could see in a double-dip recession, or whatever the pundits want to call this thing, the oil price going lower in the near term. But I think 5 or 6 years out that the oil price goes much higher, and it goes much higher for a fairly simple reason. Most casual observers of the energy scene worldwide believe that most of the oil that's produced in the world is produced by the big oil companies, Shell, Exxon, Total, British Petroleum, people of that ilk. That's not true. Most oil in the world is produced by national oil companies. It's produced by oil companies that are controlled by the political apparatus in countries that produce the oil. It's as though the oil industry in the United States was controlled by the post office. These businesses are inherently inefficient. And the problem that I see on a going forward basis is that many national oil companies have diverted so much of the cash flow from their oil and gas business to subsidizing politically popular non-oil programs in their country that they have starved their national oil companies for reinvestment. For the last 5 or 6 years, in some cases 10 years, several large exporting countries, particularly Venezuela, Mexico, Ecuador, Peru, Indonesia, and Iran, have taken so much money out of their national oil companies, or, to put it differently, have reinvested so little in productive capacity that I would suspect that those countries in the 5-year time frame will not any longer be in a position to export any oil whatsoever. If that's true, that means as much as 25% of world export crude comes off the market. And that's a truly scary thought. That points, in conjunction with rising demand for oil from places like Brazil, Russia, India, China, to declining supply. Increased demand and declining supply does a scary thing to price.
So are you expecting an impending spike in the price of crude oil?
I am.
Do you have any targets there, or is that just more a correlation to the dollar and how it exists versus the other currencies?
Well, that's a very good question. I expect to see the price 50 to 100% higher in real terms, non-inflation adjusted terms. Part of the problem in terms of price forecasting is that you have to get both the numerator and the denominator right. And I think the denominator in terms of global oil pricing, which is the U.S. dollar, will be appreciably lower in the 5 or 6 year time frame. So while I think that the real price, if you will, measured in 2010 dollar terms, could be in the $150 a barrel range, I think the price that you see at the pump, or the price that's quoted in the Wall Street Journal 5 or